What up, Hyperchange? Welcome to another episode. We're live, waiting for Tesla's shareholder letter to come out. We did this last quarter. It was a ton of fun. So we don't exactly know when Tesla's shareholder letter will come out. The earnings call is at 3:30 Pacific time. It's 1:12 right now. So still 2 hours till that. But usually they release the letter around 1:15, 1:30. So it could happening any minute. So I have the Tesla IR website right here. I'm just refreshing the page. If you Google Tesla IR and go to the page, that is where it'll be posted. I think the fast way to do is refresh or check Twitter. But anyway, we're here. I'm waiting. Can't wait to check out the numbers. Just to run through my expectations really briefly, we already know Tesla delivered 112,000 cars, record deliveries for the quarter. I think I'm estimating about 7.05 billion in revenue for the quarter, and then about 300 to 400 million in operating income, 364 million to be exact. My exact estimates are 7,048 for revenue, billions or millions, and then 364 million for operating income. So I want to see how close that gets. And I think it's going to be a really strong quarter for cash flow as well, because they delivered about 112,000 cars, only produced 105,000. So that's really, really strong quarter for cash flow. But there is not all of that's going to go directly to their bank account. They do have two loans that I think they may have paid back in Q4. So we're going to see, get an update on that. Vegar, thank you for the super chat. In this shareholder letter, one of the biggest things I'm looking for is 2020 guidance. They're going to say how many cars, or last year they said how many cars they were expecting to deliver in 2019. So I think that could be really exciting if they set the bar for here's how many cars we think we're going to deliver in 2020. I'm thinking around 550,000, but for Tesla to officially announce that will be awesome. Additionally, we're probably going to get clarity on Model Y. We had another sighting today. Shout out to Vincent, who sent me this article showing that there was a Model Y spotted in Canada. So we've literally been seeing Model Ys pop up everywhere. And I think they're going to announce something either like a first date for customer deliveries or say we're already delivering to first customers. And I think that's going to be really exciting. So there's going to be a ton in here. I also think one thing that Wall Street and like the financial media could get super pumped about is that they could announce they're expecting a full year profit for 2020, which would be really, really exciting. Tesla, if they have a really strong like blowout quarter this quarter, which I'm not quite expecting, I think they'd have to hit like 900 million in GAAP EBIT to hit enough net income for the fast 4 quarters to hit positive GAAP earnings for the full year. So not likely Tesla will be profitable for the full year this year, but I think there's a very good chance they are next year, and they're going to put that in the letter, which will be super exciting. Now I'll take your questions. Okay, a lot of you are wondering about China. So there is obviously the huge virus in China, which is a bummer, pretty sad news and kind of scary, honestly. And it sounds like they're shutting down a lot of things in China. That could get worse before it gets better. But I mean, so yes, that will definitely slow the ramp at Gigafactory 3. I mean, I hope, or Gigafactory Shanghai, I hope they're even closing it and taking all the measures that they need to be safe. But the bottom line is, I think that'll be okay because, you know, it's not like a Tesla specific issue. All of China is shutting down. This is a headwind for the entire global economy, frankly, if this continues, but it's not a Tesla-esque problem. Like the second China bounces back, then Tesla will bounce back as fine. It's not like anything has changed in the long run. I just think that's short-term noise with the news in China. So, and you guys can all hear me great, right? I'm using a new mic, so maybe thumbs up if you can hear me. I want to make sure the audio is awesome. Turning up the volume to make sure you can hear me. Anyway, I'm going to refresh Tesla earnings, see if we got the shareholder letter. Still nothing yet. If you have any questions about what to expect or what you're thinking about during the quarter, please leave it below. Would love to know what you all are thinking. Thank you for letting me know about the audio. What are 3 to 4 key metrics you're looking at off the bat when earnings are released? Oh, this is a good time to bring that up. Earnings. So a lot of people say like GAAP earnings. Everyone's like, oh, well, what about the Wall Street consensus? Like that $1.30 per share earnings number, like per share earnings, was it a beat or miss over Wall Street consensus? Like, I don't like to look at that. To me, that's totally confusing and just pointless. And it gets you in this like circle of analyzing numbers that aren't really like tied to just the core business. I want to see what their sales are, revenue. That's going to be the first number I look at. The second number I look at, which I think is the most important metric for profitability, is operating income. or EBIT, earnings before interest and taxes. I believe that's the closest you can get to the core intrinsic earnings of the business in a period. So that's what I'm going to be looking for to see the profitability. First, I'm going to be looking at revenue. Second thing I'm looking at is operating income. Then I want to flow down to cash flow and see what the operating cash flow is, basically the cash the business produced. Then I want to see what the capital expenditures are, how much they're investing in future capacity. Updates out. Okay, sorry. Well, I guess we're going to look through this live. Wow, this is sooner than I was expecting. Awesome. All right, so let's look through these numbers right now. 930 million increase in cash. Wow. $1 billion in free cash flow. Cash up to 6.3 billion from 5.3 billion. This is huge. 359 million GAAP operating income. I was at 364. So awesome to see that close. Model Y production ramp started in January 2020 ahead of schedule. They've already started ramping Model Y. Increased Model Y EPA range from 315 to 350 miles from 280 miles. Sorry. Record Q4 energy storage deployment of 530 megawatts. That's huge. That was up from 477 quarter over quarter, seasonally weak quarter two. So that is unbelievable. Sorry, I'm going to try not to get too excited here because this is an awesome. First off the bat, it looks like even better numbers than I was expecting. I would go to Tesla IR, Google that. The first thing you'll see if you scroll down a little bit is a PDF of Q4 update letter. It's like a presentation. Go check that out if you want to follow along right now. They start with the summary. 2019 was a turning point for Tesla. Strong organic demand for Model 3, return to GAAP profitability in the second half of the year, generating $1.1 billion in free cash flow in the second half of the year. It looks like strong growth despite persistent cost controls. That's something Tesla's done an amazing job. Huge growth. Oh, Jeremy from Financial Education, what up? And so the pace of execution has improved significantly. As a result, they're starting Model 3 production in Shanghai 10 months after breaking ground in the factory, already begun Model Y production. So this was the news to drop, was Model Y is early. I was expecting them to announce deliveries every day. Now they're basically saying we already started production. We're already doing deliveries. This is so exciting. Sorry, I'm just going to be browsing this and then seeing what other big numbers they have here. Looks like 105 million in GAAP income as well. Wow. Automotive gross margins coming in at 22.5%. Overall GAAP gross margins at 18.8%. I had 19%. So right in line. I thought that was going to be a little conservative. So maybe a little bit of a bummer on the gross margins, barely. Total revenues coming in very strong, 7.384 billion. I believe that's a record all time for Tesla, which I was not expecting. So that means higher average selling prices for the Model 3. That's extremely exciting. Operating cash flow almost doubled sequentially. We knew this was going to be strong, so don't get too pumped about it because it's not going to last every quarter because of the whole production delivery outbalance. But $1.4 billion of operating cash flow in the quarter. I mean, annualized, that's almost $5 billion in cash flow. Tesla's already worth $100 billion. That's only a 20x or 5% free cash flow yield. That's unbelievable. But once again, that cash flow probably is a little inflated, but really exciting. They ramp up capital expenditures from 385 million to 412 million. So 1.4 billion minus 400 million in capex. We're looking at $1 billion of net cash added to Tesla's business. I mean, this is a business that's pumping out now, just pumped out $1 billion in cash in a quarter. That's big numbers. I mean, that's why their cash balance went up from 5.3 to 6.3 billion, by far the most cash Tesla's ever had on their balance sheet. So you combine the fact they're at record cash, the cash is at record highs, and we just had their convertible debt, or the stock price passed this strike price for the convertible debt. So they effectively converted some debt into equity dilution, which means the delevering continued even further. I can't link to the letter because it'll take me too much to change it. But if you Google Tesla IR, Tesla space IR investor relations, and go to that home page, you'll see the Q4 letter right there. I'm going to scroll down to keep going on this. Fremont capacity, together Model 3 capacity, or the production of Model Y started in January 2020. Together with Model 3, our combined installed production capacity for these vehicles is now 400,000 units per year for Model 3 and Model Y. I'm still probably about 100,000 capacity for Model S and X. That means Fremont's at about 500,000 units per year. That's extremely exciting. It looks like you guys are all commenting that the stock is way up, so I'm going to check that out. After hours. Wow, Tesla at 605 after hours, all-time highs. That's epic. Honestly, I'm not getting too excited about the stock price. Like, who cares? The business is on fire. The business is executing. That's what gets me pumped. I'm not like looking too much into the stock price. It could crash. It could go up. It could go down. I mean, it's awesome that it's going up, but like the really thing that's exciting here is that the fundamentals of the business are looking so strong and strategic here. Back to the shareholder letter, the ramp of Model Y will be gradual as we'll be adding additional machinery in various production shops. After such expansions and done are done by mid-2020. Installed combined Model 3 and Y capacity should reach 500,000 units per year. We will start delivering Model Y vehicles by the end of Q1 2020. So that's the confirmation. Model Y deliveries starting in Q1 2020, up from Q2 that they said last year, or up from Q2 they said last quarter, and up from Q4 they said originally. So Tesla, which was famously known for missing all its targets, is now way ahead of its targets on the Model Y, which is the a crossover utility vehicle, the largest segment of the automotive market. Many people, including Elon Musk, think this will be Tesla's best-selling product, outselling Model 3, S, and X combined. So to see this ramp early, to see this be in the market is unbelievable. Wow. Jeremy with the huge super chat for some Uber Eats tonight. Thank you so much, Jeremy. That's awesome. I hope you've been holding on to your Tesla stock. All right, Shanghai Gigafactory update. We have been gradually ramping local production of battery packs since late Q4 2018. So they're actually already building the battery packs in Gigafactory Shanghai, ramping that up. Rest of Model 3 manufacturing processes are running as expected due to strong initial customer response in China. Our goal is to increase Model 3 capacity even further using existing facilities. So it seems like they've been overwhelmed by the Model 3 launch or demand in China. Oh, thank you for the super chat. Berlin delivery in 2021. I'm about to get to that. We have already broken ground on the next phase of Gigafactory Shanghai. Given the popularity of the SUV segment, we are planning for Model Y capacity to be at least equivalent to Model 3 capacity. So they already guided 150,000 Model 3s a year in China, or I believe. Now they're saying Model Y could be equivalent. That's another 150,000. That's 300,000 vehicles at $50,000 selling price. I mean, I think that's like 15 billion in annual revenue, if I'm doing that math right, which is huge just for that Chinese region. Berlin, Brandenburg, the new Gigafactory they announced in Germany. We are moving forward with our preparations near Berlin, which we have selected as the right place to be vehicles for Europe. First deliveries from this factory are expected in 2021. That's unbelievable. I bet it's probably going to be, they're not moving as fast as China, probably going to be late 2021 for Germany. But to see that on track, them already making moves here is incredible. I mean, Tesla is a business that they sell as many cars as they can produce. So for them to be thinking about growth, you need to be thinking about how they expand production capacity, how we get to more gigafactories. And it looks like they're already putting all these puzzle pieces in place. Model 3 deliveries by region here. Everyone's talking about how Model 3 deliveries were down in 2019. That was like the only short seller argument that people were talking about, but they actually show in this chart that they were up from about, looks like 148,000 to maybe 160,000 in the US. But that's at the same time. Then they also launched Europe, Greater China, and other. You can check out this chart. So Model 3 deliveries more than doubling in 2018, from 2018 to 2019, their flagship product. Really, really exciting there. Core technology, moving to this next slide. This is page 8 if you're following along with me on the shareholder letter. To date, Tesla's driven over 3 billion miles in Autopilot. This is data is the new oil. Them collecting more data, running that through their neural nets, running that through their full self-driving computer. This is the secret sauce of how Tesla gets to the level 5, true autonomy before its competition. So that's why it's so important to watch this update. They even have a picture here of, I'm getting ahead of myself, but all Tesla vehicles with our FSD computer have been updated with new software that can better detect new details in their environments, allowing us to show various lane markings, traffic lights, stop signs, cones, as well as other vehicles and road usings. Understanding the environment around a Tesla is key to enabling our cars to react to traffic lights and stop signs and take intersections through city streets. We are currently validating this functionality before releasing it to customers, and we look forward to its gradual deployment. This is super exciting. I was just in California. Shout out to Omar, driving around in third row, driving around his Model 3. And I mean, he had the new hardware 3 with his Model 3 showing the visualizations. This is extremely important because when you look at the screen, when you're on autopilot, you're seeing what the car sees. That makes you very comfortable with what the car is doing and where it's going. And so the fact that Tesla's, allowing these new visualizations to come out, it's incredible. You can like zoom in, zoom out, sort of like look at the cones, look at the stoplights. It even was showing on the lane markings on the road, like this is the left turn lane, this is the straight turn lane. So the pace of innovation in terms of the software UI and Tesla's overall autopilot software has been mind-blowing, really. So that's what they're talking about here as we get closer and closer to that full autonomy. Vehicle software. This is really exciting. So in-app purchases, the start of that Tesla app store and marketplace, software, extremely high margin software revenue, that fleet of 1 million cars on the road that are connected, that are really computers on wheels, more like an iPhone just with wheels that they can sell all these apps and services onto. So they're talking about that here. And they say in Q4, we launched premium vehicle connectivity in the US for $9.99 a month, plus tax. This enables our customers to stream music or videos, browse the internet, see live traffic through an embedded connection. We also introduced in-app purchases where our customers can buy various software software updates such as basic autopilot, FSD, acceleration boost, and additional premium features, software will continue to play a growing role in our business model. So this is extremely exciting as they're pushing more into this high margin software side of the business, and they're actually talking about it and how they're going to, and this is key, software will continue to play a growing role in our business model. This cannot be understated. As Tesla moves telling more and more software, turning more into more of that computer on wheels margin type company, I mean, this is going to be really exciting, and Tesla hasn't really confirmed it. So to see them confirm it here is an interesting sign. So Walter, thank you for the super chat. Appreciate that, man. Go Tesla. Battery and powertrain. Due to continued engineering progress of the Model Y all-wheel drivetrain, we have been able to increase the maximum EPA range to 318 miles compared to our previous estimate of 280 miles. This extends the Model Y as the most energy-efficient SUV in the world. That's really exciting. They show the electric SUV energy efficiency, EPA miles per kilowatt hour of the Model Y versus all the competition. It looks like it's almost a 30 to 40 to 50% premium in terms of efficiency against like the I-Pace, Mercedes, EQC, Ford. More data showing that Tesla's electric skateboard is far ahead of the industry. Another super chat here. Mark, thank you so much. All right, energy business. This has been one of those pieces of the business that, Frozen, thank you for the super chat, that has been totally underrated, that I think has been quietly validated and booming. Jurgen, thank you, that people don't like appreciate, which is Tesla's back, because their car business is so big and so lumpy. You're not seeing this, which is now a multi-billion-dollar energy business, having extreme growth potential and be validated. So they have this chart of energy storage deployed in megawatt hours. Looks like they deployed about 1,600 megawatt hours in 2019, up from 1,000 in 2018. That is 60% growth. But sorry, I need to take a sip of water. Looks like a little bit less growth than they were projecting. I think they wanted to do 2 gigawatt hours, which would have been 100% growth. They come in at 60% growth, but still amazing numbers for Tesla. But I think this is a quiet piece of the business that has slowly been executing. Lance, I should say this cannot be overstated, or have I saying that too much? My bad. Should I dab? Anyway, so in Q4, they deployed 54 megawatts of solar, 24.6% more in the prior quarter. Where offered subscription solar has grown significantly in Q4 with a monthly subscription that can generate income from the first month of usage. There is no reason not to have solar panels installed. So that's exciting too. We had another quarter of sequential growth in that solar panel business. So that shows that new push towards leasing and solar panels is been growing that business. And in seasonally weak Q4, there's less sun shining. So those old leases aren't generating as much. Or no, that's not right, because it's solar megawatts installed. But usually in Q4, they install less solar because it's not as sunny, or I think it has something to do with the weather. But so for them to see this increase in Q4 despite the seasonality is really good. And I think, but that's more of a 2020 story as they continue to push on that solar, and then the solar roof really starts to ramp. I think long term, we're going to have a very big potential there. And they do highlight the solar glass roof here. We continue to ramp both solar glass roof production as well as installations. In addition to Tesla installers, we have also partnered with several roofing companies to support installations to fulfill demand for solar glass roof. After organizing several roofing company training days at our training homes in Fremont, we already demonstrated dramatically shorter installation times versus previous versions of this product. Solar tiles are made in our Gigafactory New York. We are hiring hundreds of employees at this facility. I really want to do an update in a Gigafactory New York and see what's up with that, because I think they're quietly ramping that, although it's kind of been on the back burner for a while, but now it's ramping up. Now they got that technology with the V3 solar roof down. I was in the store. I was checking out the V3 solar roof. It looks really, really good in person. I have a video of that on my channel. But I think this is going to be a story that takes time to ramp. And what's interesting about it is they mentioned the dramatic reduction in install times. This is one of the biggest burdens of solar panels. If you've gotten old school solar panels, you probably know they have to come out to your house. They have to get a quote. And the installation process is very cumbersome and burdensome. And that is one of the biggest frictions to actually getting the solar panels. And so the fact that that is a big area of focus, not just the panel itself, but how do you get those panels on the roof quickly, cheaply, in a fast amount of time, is a big innovation. And that's one area where Tesla is really working on, because this solar roof product has huge potential, but there's so new, it's so revolutionary. There's a lot of innovations to work through, and they are working through them. So it's been years in the making, 3 years for that solar roof or more, 3.5, but to see it in the market and ramping now is really exciting. I'm actually going to fly out to Soph. If he's tuning in right now, I want to fly out because I think he's going to get his solar roof on his house, and I want to check it out and make a video to show all of you. By the way, thank you for all the super chats, guys. This is awesome. Yashar, Beat, Artisan Electrics. I'm trying to see if you guys have questions. Vitali, just thank you so much for the super chat. Third row, what up? Okay, now we're getting to the outlook part of the letter. This is going to be really exciting. For the full year 2020, vehicle deliveries should comfortably exceed 500,000 units. Wow, that is the guidance. So I thought it was 550,000. So that looks still on track here for full year. Vehicle deliveries should comfortably exceed 550 or 500,000. So Tesla delivered 260,000 vehicles or so in 2018, 367,500 in 2019. And then it's like, what's it going to be for 2020? I was just on Yahoo with one of the unnamed short sellers who like has been totally wrong, and the company's like 2020 is going to be a disaster. Well, it doesn't look like a disaster to me because they're going to go from selling 360,000 cars to selling 500,000 cars in an era where every car company is struggling. They're flat to declining growth. Tesla every single year record sales by a massive margin. They're selling more and more computers on wheels every quarter. This is really exciting. And this is due to the ramp of Model 3 in Shanghai and Model Y in Fremont. Production will outpace deliveries this year. Both solar and storage deployment should grow at least 50% in 2020. So that's exciting. They're taking a little bit more of a conservative approach to guidance, it looks like, which I think is very smart. Shout out to Martin, the IR team. I'm a big fan of what they've been doing for Tesla. These new reports are beautiful, super clearly laid out. So I'm a big fan of that. And it just looks like their guidance is very strong. Like they're saying, 50% growth in energy deployments, 50% growth in solar deployments. Energy business, which is almost flat this year, or we're going to get into that, is poised for strong growth in a record year in 2020, along with the vehicle business. So both sides of Tesla business, energy and vehicles, rapidly growing, very strong guidance, which looks like it can be easily achieved. So I like that. They're taking a page out of like the Apple playbook where they always crush their own guidance. I bet their internal goals are a lot bigger. Cash flow. We expect positive quarterly free cash flow going forward, with possible temporary exceptions, particularly around the launch and ramp of new products. We continue to believe our business has grown to the point of being self-funding. I do want to make a point here that I think Q1 is going to look ugly. Tesla's Q1 always looks ugly because they build more cars than they sell. It's also the weakest quarter of the automotive business. Like, not many people buy cars in Q1, so that's why the sales look weaker. And then they're also going to be ramping Model Y and Gigafactory 3 Shanghai at the same time. So those expenditures, when they say free cash flow going forward, except when we ramp new products, they're ramping 2 new huge products in Q1. So, as good as Q4 is right now, I also think it's important to temper your expectations for Q1 going forward, but that's normal. And when you look at the year-over-year comparison of 2020 Q1 to 2019 Q1, it's going to show big improvements in cash flow, even though it may not be positive, and big improvements in deliveries, and pretty much every single number across the board, and that's really what matters. So Hypercharts is updated as well, so you can go to hypercharts.co/Tesla. Someone just said that. That's not me, that's Mo who's updating it, so shout out to Mo for that. If you want to just follow along and visualize some of these numbers. Profitability, we expect positive GAAP net income going forward, with possible temporary exceptions around the launch and ramp of new products. Continuous volume growth, capacity expansion, and cash generation remain the focus. That is very important. Tesla's basically telling you, yes, we're going to be probably a little bit profitable, but we're not focusing on profitability. We want a continuous volume growth. We want to sell more cars. We want to expand our capacity to build more cars. And we want to generate cash. They're not trying to show profits on the income statement. That's why you don't want to value Tesla with a PE ratio, because they're growing too quickly. They're not focused on earnings. They're not a mature company. They're really invested in growth. And that's what they're saying here. And I like that they're saying that. They're like, I think in a year or two ago, they were a little too focused on like, we're going to be profitable every single quarter going forward. And it was like, we don't care. Nobody cares about the profitability. We just want to see the business continue to grow and invest in the right things that matter. Sorry, I want to make sure I didn't miss the super chat. Thanks, Trey and Travsman. Props from Australia. Love in Australia. Okay, production ramp of Model Y in Fremont has begun ahead of schedule. Model 3 production in Shanghai is continuing to ramp, while Model Y production in Shanghai will begin in 2021. That is very big news, because we didn't know when they were going to start Model Y production in China. Now they've said 2021. Maybe that's a sandbag. I don't know. That seems longer than it should be. I guess they're really focusing on Model 3 in China for now. So that's going to be the focus. We are planning to produce limited volumes of the Tesla semi-truck this year. Originally supposed to be debuted in late 2019, pushed back to 2020. They sent out an email to Tesla semi reservation holders saying they were doing all this awesome winter testing and they were going to start deliveries. So awesome to see that in the letter. So in terms of product, this is a big year for Tesla. 2020, we have Model 3 happening in Shanghai, which is going to be huge growth. Model Y happening here in California in Fremont. All you reservation holders get pumped. And the Tesla Semi, but they don't say where they're building the Tesla Semi. If I had to guess, I would say it's at the Gigafactory, and that's where they're going to be building future vehicles like the Cybertruck as well. Now, will those cars have the new battery from Maxwell? That is the question. That's one thing that isn't in this update that I hope gets brought up on the conference call that I was hoping to see, which is Tesla going to talk about their battery and powertrain investor day? All of us Tesla super nerds, I've been wondering since Tesla bought Maxwell Technologies, the dry battery electrode, Elon confirming on the Third Row podcast that that is why they bought Maxwell basically instead of the ultra capacitors, saying it's a very big deal and they have big news to announce about this. And so this is really, there's a very, very exciting announcement that Tesla has about its battery technology that is going to have large implications for which vehicles they're building where and what the specs of those vehicles are. And it doesn't really matter for Model 3 and Y, but for everything else, I think it will matter. And we didn't get a date on Battery Investor Day yet. So I don't know what to tell you about there. Photos and charts. Fremont Factory Model Y body shop. Wow. So they're showing a picture here, slide 12, if you're following along on the shareholder letter. And yeah, they have this line, they show all these like big robots and the Model Y body line. So that's pretty impressive. I really like how they've just been putting in work on the Model Y and just executing on that production line, not worrying about telling people about it. They're just doing it. And so showing pictures of it to just say, here it is. Another picture of the Model Y body shop. And now I'm trying to see if this is that new stamping machine, because there's a couple big potential innovations here, and it looks like there's a big frame of a Model Y body here that could be stamped all at once. Our new casting machine, I don't know exactly what it's called, but this big new thing that like basically takes 70 parts that were on the Model 3, turns them into one part, way more efficient to build. And there's some key manufacturing innovations there. Elon even hinted on Twitter that Sandy Munro would be pumped about them. So I'm hoping they mention that on the call, not only that they've started Model Y productions, but what new technologies are going to the Model Y. I think the wiring, new type of revolutionary wiring harness system that could be better installed by robots is also something people have been rumored to be in the Model Y. So we'll see if that gets mentioned as well. Estimate for Tesla market cap in 10 years, $1 trillion. That's my guess. Model Y body shop here. More pictures of that. Wow. So they say Model Y 10 months from production to prototype start. That's pretty cool. They show the March 2019 prototype to the 2020 production vehicle. Model Y looks pretty awesome. Fremont factory layout versus Gigafactory layout. Okay, this is a really cool slide and debunks one of the biggest myths about Tesla right now. Tesla's been doing an amazing job at expanding capacity, but they're spending way less money than ever before to expand capacity more than before. How is that possible? This is something that's confusing a lot of skeptics and Wall Street analysts. They're like, oh, the capital expenditures, the investments in new robots seem so low. How is that possible if Tesla's expanding production? Because they're getting so much more efficient at that spend to expand capacity, and you will understand why in amazing visuals. If you just look at this slide 16 here, you'll see the Fremont factory, which they purchased from like GM or Toyota. It was some defunct plant. They basically had to I don't know, it's kind of like totally very disorganized and wasn't built from scratch by Tesla. So they're basically repurposing all these different rooms. You go to stamping, then you wiggle down to the body facility, then you wiggle back up to the paint shop, then you loop around, then you go to GA Assembly 3, but also that got too full, so then they have the GA Assembly 4 in the tent. It's basically like this kind of hodgepodge of different systems, not designed perfectly, and that was sort of limiting Tesla's ability to do the most efficient streamlined production. Mike, looking forward to see Model Y too. And so now if you look at the picture on the right, of the Gigafactory 3, and you can even see just from Gigafactory Shanghai pictures, it's like this long thing. And the biggest thing about Gigafactory 4 is that they had the trucks able to easily access different parts of the facility to give the parts right to the production line when they needed those parts. And so that key innovation and simplicity of literally just like one big production line, which Gigafactory Shanghai is, instead of this hodgepodge of different systems, is a reason why they're spending so much less to build that factory. It's a reason why it's been able to ramp so much quickly. It's a reason why it's evidence of Tesla's pace of innovation in terms of how good they are at manufacturing. I would say that Tesla went from manufacturing being way worse at manufacturing than every auto maker to way better within the past year and a half or 2 years. All those struggles and failures of Model 3 at Fremont have enabled huge success of future factories. So you struggle, you fail, you learn, and that is exactly what Tesla's done here. Jeremy coming in with another epic super chat. Got to go prep a video. Good luck. I'll be tuning into your video, Jeremy. Financial education channel, for those who don't know, is a friend of the channel, and he's actually the reason why I started YouTubing, because I saw Jeremy posting videos analyzing different stocks and companies, and I was like, wait, like you can make videos about stocks that I like? Like I want to do that. This is awesome. So I've actually gotten to meet him, and he's awesome. So thank you for the super chat. And scrolling down here to the key metrics summary, number 17, operating cash flow. Free cash flow, like I said in my Yahoo interview, positive 5 out of the past 6 quarters. I mean, free cash flow of $1 billion. That's after investing for the future. This is pretty, like, I didn't think that it would be I knew the cash flow was going to be strong. I was expecting 1.2 billion operating cash flow, 700 million free cash flow. They post $1 billion. I mean, Tesla as an asset is worth 100 billion, but they just made $1 billion in a quarter. That's 4 billion a year. I mean, it's really a pumping out a lot of money, which is so exciting. This means they're going to have no problem paying their debt. The financial security and health of the company has never been stronger. So really exciting to see them just continually, quarter after quarter, put up more and more cash flow and just prove the skeptics wrong. I mean, it's easy to say one quarter's luck and it's accounting this, accounting that, but it's like when every single quarter they keep adding hundreds of millions and now $1 billion to their cash, like you can't really argue with cash in the bank. And I don't know if you guys live in the US or anywhere, but I see Teslas everywhere. Like, it doesn't take a scientist or Wall Street analyst to figure out these cars are everywhere. People are pumped about them. They love the product. And the financials are a lagging indicator. You know, all of us knew that. We all saw Teslas on the road, and now Tesla's like, yep, we sold all those cars. Look how much money we're making. They were also positive from a GAAP income statement as well. They aren't GAAP profitable for the past 4 quarters combined, which means I don't know if they'll qualify for the inclusion of the S&P 500, which is a big catalyst. A lot of people getting pumped about. It's this large index that basically holds all the largest companies in the US. Thanks, Walt, for the super chat. And if you're including that index, basically all these investment funds are forced to buy it because they track the S&P 500 index. This is what Warren Buffett says, like the best thing to buy if you don't want to worry about investing is just buy this index that tracks the biggest, most successful US companies. And so Tesla's on the cusp of getting added to that index with profitability, and that will be huge if they do, because that could result in hundreds of millions of dollars being forced to buy the stock. Very important, but I don't think we're quite there yet. Miguel, thank you for the super chat. Appreciate it. Model Y, if you guys have any other questions. Oh, vehicle deliveries and free cash flow. Very cool overlay chart. Looks like Martin's been working hard on this. Basically, Model 3 ramp to 5,000 per week. Basically showing that as vehicle deliveries ramp, cash flows ramped. It's pretty cool to see this visualization here, and very clear to say that Tesla has sort of reached this critical mass inflection point where for so long, Tesla was building so many superchargers, so many service centers all around the world in preparation to really have millions of cars on the road. And that's when they were going to be profitable. That's when the business model makes sense. You know, they have all these stores. They have Model S and X in the store. You don't need to build new stores. You just put the Model 3 in it. Then you put the Model Y in it. And, you know, the incremental profits from these new vehicles drop right to the bottom line because you're like operating expenses per new product are so minimal. And so that's what kind of this chart is so interesting, is that we've reached this sort of inflection point where Tesla's business is now past that critical mass and is now pumping out cash flow. And what's awesome about it is we passed the critical mass way earlier than I was expecting, selling 112,000 cars a quarter. Tesla's on the cusp of ramping to 500,000 cars plus a year, 200,000 cars a quarter. Think about how much more incremental cash flow we're going to get from all of that. So really exciting. I mean, this just gets me pumped because when I think about all the crazy things Elon Musk is scheming up, the Tesla Semi, the Cybertruck, huge new batteries, Tesla airplane, Tesla boat, who knows, the Model 2, that compact car in China, like all these things all these ideas Tesla have are now possible because they have the cash to fund it. And so that's a really big deal. For Tesla's success, the long term is now they can turbocharge R&D, hire literally every single smart engineer they can afford, and they can have the ability and financial leeway to build out the production lines for these new vehicles, which is awesome. And if you're a believer in the mission of the company, which is, I think we all are, and it's why I am, it's like, this is what the world needs right now. We need better battery technology. We need electric vehicles to ramp faster than ever. Tesla's financial success not only means that they're going to do their thing in the transportation sector, but it means that everyone's going to have to copy them even faster. Their business model of electric vehicles got validated even further. This is going to make every other automaker try and invest in EVs even more, and that is so exciting. And I think like just a huge feel good, like this is like the best feel good story of 2020 or the past year, is that Tesla succeeded and the entire auto industry is transitioning to electric. And the next thing they're going to do is energy with batteries and solar panels. These are not only huge growth initiatives for the company, but really desperately needed things for the world's energy and transportation systems. And so that is so exciting. Diving into the like footnotes here. Oh yeah, if you see a Cybertruck in real life, that's going to be, yeah, it's going to be epic. Okay. I do want to see how much credits they got from the sales of regulatory credits, because this is something that they don't include this time. Well, they used to include a little line item that said how many regulatory credits they were getting per quarter. And I think that was really interesting to see, because Tesla is in a multi-year deal with Fiat, I think, to get regulatory credits. This will continue to be a revenue line item for years, as basically other automakers can't afford to build EVs, so they have to buy credits from Tesla. An interesting revenue stream. It doesn't look like they break it out. Yeah. But anyway, the energy revenue for the quarter came in at $436 million, above my $425 million estimates. That's a record quarter for energy in a seasonally weak energy quarter. So that energy business has reached a key inflection point. So Tesla's energy business was sort of flat for like a year or two, because their solar business was going like this. After they acquired Solar City, they were waiting for the solar roof to come out. Michael Johnson, appreciate the super chat. And then so solar is going like this. Well, batteries are going like this, right? But so what's happening? The energy revenue is flat. But in the meantime, the energy business, the batteries are booming. And now batteries are such a big part of that energy business, they're going to grow energy revenue. But guess what? That solar's isn't just declining anymore. It's started to turn a corner as they've introduced this new leasing model and as they've introduced the solar roofs. Now we have a double tailwind effect hitting the energy business of both batteries continuing to grow rapidly, be validated, the whole megapack business model, as well as the solar business coming online. So I think that's kind of a silver lining of this, is as much as the automotive business is on fire and making a ton of money, now we have the energy business as well becoming extremely profitable. Or not profitable, growing. Well, I don't know about the gross margin here yet. Oh, it looks like the cost of the energy business was $385 million. So let me just do some quick math here. Looks like energy gross margin was 12%. I don't know if I'm doing that right, which would be lower than Q2. So not great energy gross margins, but that is what it is. Net income here. Just to reiterate the revenues, I can read the full year ones too. It looks like, so for the quarter, 7.384, about 7.4 billion in revenue, 18.8% overall gross margin. That led to income from operations of 359 million, GAAP net income of 132 million or 105 million, which is 58 cents per share basic, 56% share diluted, 187 million shares outstanding in the diluted share count. I believe that includes some of the warrants. I'm going to make an update on that soon. For the full year, Tesla does revenue of 24.578 billion. So that's about almost 25 billion in revenue, 4 billion in gross profit, 4.1 billion, loss from operations of only 69 million. So they improved their loss. Last year, they lost about 388 million. This year, they only lost 69 million in terms of earnings. So that's a good year. Tesla's right around there at break even, and I think that's going to be positive. They didn't actually update profitability for the full year with guidance. So that was interesting. 95 million automotive credit. Someone says they found that number. I can't find that number. Interesting. Anyway, the cash flow for the full year, let's just dive into this because that'll include the weak Q1. Cash flow from operating activities was 2.4 billion this year, up from 2.1 billion last year. So that's pretty impressive. Then they had minus capex of 1.3 billion, so about a billion of overall annual cash flow for the year. So even for the full year, Tesla pumping out a billion in cash there. So a really promising year here. I think at a high level, I'll try and wrap this up, is at a high, basically what has occurred this year is extremely important, because we went from Tesla having this awesome car that everybody loved towards, and like having a business that was like kind of losing money. They were investing like crazy. Nobody was sure what the real margins were. Nobody was sure whether they could make a profit with the lower price Model 3. I mean, this was the big argument. Oh, okay, you were profitable in late 2018. That's only with the high price Model 3. What happens when you normalize the price? You come out that $40,000, $35,000 Model 3. Everyone buys that. The margins tank. The average selling price of your computers on wheels decreases. There's no way you're going to make money. Well, guess what? Tesla sold even more cars at a lower average selling price. The margins maintained. They were actually able to improve their operating income per year, improve the cash flow this year, despite that drop in average selling prices. And now next year, those average selling prices are stabilizing, yet we still have a massive increase in volume. And if you think about it, Tesla gets so much better at manufacturing. They're going to, oh, the credits are on page 4. Ooh, okay. I found my regulatory credits. Thank you. It looks like 133 million of regulatory credits in Q4 this quarter, up from 95 million in Q4 last year, down from 134 million in Q3. So you can't. This is one of the other short selling things. Like, oh, the credits are the only reason Tesla's making money. Nope. They made 364 million this quarter. 133 million of it was the credits. So they still would have been made a bunch of money without the credits. $1 billion in cash flow. Only 100 million of those are credits. But I mean, yeah, I think the truth is, like, people, I think it's Tesla's actually credit revenue could grow significantly in the future as governments start to price in the importance of electric vehicles, but we're not relying on that. So, yes, that is what it is. I'm wrapping this off. They mentioned paying off debt. So Kanan from Clean Technica, shout out. Clean Technica is also going to be live streaming the call with some visuals from hypercharts later today. If you want to live stream the call on YouTube, or you can go to Tesla's website and just listen to the call. So the earnings call is when Elon Musk basically gets asked a bunch of questions. He's going to ask shareholder questions from Say, which is a project that you hyperchangers all know about, that we helped set up to get your questions answered by Elon Musk before Wall Street analysts. So a bunch of you submitted questions to that. So Elon Musk is going to ask those and then get questions from Wall Street analysts. And we're going to get a ton more clarity on these numbers, on the business. I hope someone asked about Battery Investor Day in Maxwell. So we'll see. Adam Jonas, if you're tuned in, maybe that should be your question. Any word on Gigafactory after Berlin? I don't know. I don't want to take a guess on that because I just don't know. But anyway, anything else before I go? You want a summary before I go? Or summary, awesome quarter, better than I was expecting. Tesla's business model has been validated. That was the point I was trying to make earlier, that Tesla not only now has proven their products are the best in the market, but that financially they are doing far better than every other automaker, that their business model is actually proven, it's actually working. They're self-funding. They don't need to rely on the capital markets to fund their business. They're doing it with internal cash flow. This means the company does not need to rely on perceived solvency from Wall Street to continue funding operations, which is a major de-risking of the biggest risk that Tesla had. So the biggest risk for Tesla as a company was they relied on debt and equity to fund it. Now that is no longer the case. And I think that's why the stock price is soaring. You're seeing the sales be awesome. You're seeing the profitability be awesome. They're like, Wall Street, we don't even need you to raise money anymore. We're making money from the cars. And the other last silver lining I want to leave this is the software. The way they say they're focusing more on software, and that's going to become a bigger and bigger piece of their business. They're already making money. They're already doing extremely well. Thank you, Mark. But the software is going to fundamentally transform the long-term margins of this company. And that is so exciting. That's how we get to just being even more profitable than we are today, sort of taking the business model to the next level, justifying a higher price sales ratio, higher earnings ratio, all of that stuff. And it seems like it's coming. So anyway, I'll see you guys next time. Huge shout out to all the people tuned in. This is so much fun. I'm going to do this next quarter too. I'm going to get off, just chill for a little, and then I'm going to make a video that will be uploaded tonight with a bazillion charts of everything I talked about and a review of the conference call. So I'm sure if you want to tune into that too, that would be awesome. Thank you so much for the super chats. Really appreciate it. And our Patreon supporters, you guys are the reason why I can put out all of this for free. And yeah, it's just awesome. So anyway, congrats Tesla. Unbelievable quarter. I'll see you guys later tonight. Peace.